Hello everyone, welcome back. Well, the past 2 weeks have been very rocky when it comes to SPACs. There were two highly anticipated mergers with Velodyne and Hyliion, and it hasn't exactly worked out the way people thought. Velodyne has been down 38% in the past month, right? It peaked at $31-ish, 31.36, and now it's down to 16.27. Hyliion peaked at $58, now it's down to $39. So no stock has been showing this symptom today better than CCXX. People have been absolutely freaking out by these mergers that aren't spiking. So Churchill Capital today opened and it dropped way below the floor of $10 at 9.05 before it rebounded nicely today, and now it seems like it's going to end the day positive. But what's going on, right? Has the SPAC bubble burst now? So we have to ask this question: what do we do now? And I'm going to show you some of the things I'm looking at when it comes to the SPACs in the next 2 months. So stay tuned, please like and subscribe, and I'll see you in a second. Alright guys, we have a lot to talk about today, so let's get started by looking at the SPY. The SPY tracks the S&P 500, so all of the biggest companies in the US, and it's a very good indicator of people's sentiment about the stock market and the economy in general. So usually when the SPY goes up, it means that people believe that the economy is going to be doing well in the future. So if you look at it right now, on September 24th, it hits a support, and then it actually rebounded nicely since then. If you look at MACD, there's a nice little tiny uptrend here where there's more buyer power than seller power. So there's a good reason for that. A lot of people are anxiously waiting for the stimulus package, and Nancy Pelosi and the Democrats voted for one, and they're getting very close to getting into an agreement with the Republicans and the White House. And it's absolutely undeniable that since April, the stimulus packages have helped tremendously boost the stock market because it injected trillions of dollars into the economy, and it helped consumer spending by giving people the stimulus checks. So with all of this said, that should help the SPACs, right? Because in the past several months, the SPACs had been booming with this stimulus coming. Well, actually, it hasn't happened so far. In the past 2 weeks, the SPACs have been struggling tremendously. If we look at VLDR, as we did earlier, on September 24th, it was at 1850, right? And now it's at 16, so it actually went down. And people had high hopes, high anticipation that there was going to be a ramp up to the merger. That at the merger, the price would spike. They would be able to sell, lock in some profits, and then move on to the next SPAC. Well, so far it hasn't happened. There's been almost no spike whatsoever. Now, some of the other SPACs have happened. The same thing happened to them in the past month. LCA, Golden Nugget Online, a SPAC that I love long term, but in the short term, it's down 15% in the past month. No traction whatsoever. TRNE, one of the stocks that I'm involved in, one of my best stock for September and October. Well, I have to be honest, so far it hasn't had any traction, down 10% in the past month, right? Let's see where it was in September 24th. So about 10.97.11, and since then it's lost about 50 cents. So again, no traction. DPHC, Lordstown, is one of the stocks that's held pretty okay just because of the fact that in the beginning of September it had such a huge run up from 17 to 31. So even though it lost $8, it's still up 33% over 1 month. Now let's look at the last one, because all of this leads us to the absolute panic that there was this morning, which we can see with CCXX, where they're getting close to the merger, where that $10 floor is going to disappear. And because of that, look at the panic selling in the morning, right, down to 9.05. People just don't believe anymore all of a sudden that the merger is going to bring all of these amazing rewards that people anticipated. Like Hyliion at $80 is not happening in the next 2 weeks. Right, that's just not going to happen. So now, what are we doing now? Like, if you can't count on the merger to get all of your profits, well, what are you supposed to do now? So the first thing that comes to mind, and some people will still not accept it, even though we're seeing it in the market right now, is that hype alone just cannot sustain these SPACs that have grown by hundreds of percent over a month or two. It's just not realistic. Right, so if we look at Hyliion, we all believe in the company. We think that they're doing great, good management, good product, and all of that. But when they were underwritten by professional investors, right? Like large institutions and everything. They were underwritten at $1.1 billion, which like that includes the 500 million that they're going to be receiving from the SPAC plus the PIPE. So in total, $1.6 billion. Well, what did people do? They bid it up to $10 billion before it started to retrace, right? This is a company that has 20 units in the market right now. They're great, right? We love the company, but it's just not realistic, right? As of me filming this right now, the stock's at $39. This gives them a valuation of about $6.4 billion with 20 units in the market. You can buy entire companies for that price. So let's go back to the chart for Hyliion before the merger. And I want you guys to think about these SPACs in terms of different price zones that kind of correspond to the different support levels. So everyone in Hyliion that bought between 10 and about 30, I would consider in the green zone. These are people that currently have no pressure to sell. Of course, some people are going to be freaking out because they're losing some of their profits, and some people are just going to want to lock in some profits and move on to another SPAC or another stock. But these guys have no pressure to sell right now, even if they bought under margin. Now you have the people in the yellow zone, let's call it the warning zone, right, that are between 30 and 40. These are people that are starting to feel some pressure right now. Maybe they're starting to have a little loss, or they're starting to feel, like they're being threatened, their position. But it's the people that have bought above $40 that fell into the FOMO and crazy hype about the stock's only going to go up. It's going to go to 80, 100, right? These are people that bought high and are going to be selling low. Because a lot of people in this zone right now are suffering losses. They must be feeling pressure. If they bought under margin, now they're going to get margin calls. They're being forced to sell. So this is going to be putting a lot of pressure short term on the stock until all of these people are cleared out and you're left with all of the people here that still believe in the company and aren't forced to sell. These are the people that believe in the company long term. So once we get rid of this people, like this current selling pressure, after that the stock's going to stabilize and then it will go up long term. Now if we apply this to another hype company like Lordstown, you get something kind of like this. So you would have the green zone, which is people that bought the stock between $10 and $17. If you bought into this stock, even though you guys know that I've been critical about the company, but if you bought in this range, you're fine. Just hold the stock long term, like do your thing and believe in the company, no problem. If you bought between about 17 and 22, you know that you're taking a little bit more risk. Like if the stock doesn't perform well in the next 3 months, you might be taking a hit. It's going to dip into this zone. Now, if you bought above 23, like the people that bought up to 31, I would consider this the red zone. This is the hype zone. So, I mean, it's undeniable, and that's why right now it's going down below that. So just keep that in mind. Like, again, if you're into this stock for 2 years, 3 years, 4 years, and you're willing to go with that risk, no problem. You can buy at any price you want. But just to let you know that in the short term, you have to be willing to take that short-term loss, right? If you bought this at 25, like you will feel some selling pressure because these guys aren't going to be selling, right? They believe in the stock and they're in profits right now. But all of these people that bought 25, 31, they have an incentive to sell before the stock goes down further. Now, if we look at different stocks, though, you still want to look at stocks that are very strong versus stocks that are very weak. Nicolai was a hype stock like crazy that didn't have any revenues, didn't have products. It just wasn't a good company. What happened? The stock went to $90. And then since then, you guys know what happened. I mean, it's a huge fiasco. It went crashing down to as low as $17. Now, it's recently recovered a little bit, but you guys understand this. This company just did not have very good fundamentals. Now, I'll give you another example, and this hopefully is going to make you feel a lot better about your current SPACs. Look at DraftKings. DraftKings is one of the best SPACs so far. After it merged, right, it went to $45 and was not good. It went down to all the way down to $30. In fact, low of $27.54 right after the merger. So this is a company that actually lost after the merger, as all of the people in this red zone, they just left for other opportunities. Well, the people that stuck around, what happened? It consolidated, Now, football and sports are back. There's good news. And what happened with the stock? Now it doubled back to, let's see, 60.55, right? Well, I feel like this is what's going to happen with a lot of stocks like Hyliion. In the short term, it's going to take a hit, right? No doubt. Let's look at it. Right now it's at 39.16. After hours, 38.25. So all of these people that bought into the hype, right? They're going to get flushed out. It's going to stabilize probably low to mid 30s, maybe hopefully high 30s, and then it's going to consolidate as the company starts to gain momentum, right? As the company starts to have announcements and deals and partnerships, well, that's when it's going to go back up over time. So in the close, let's talk about something more positive, and that is when it comes to SPACs, $10 is your friend. CCXX proved it to us today. The $10 floor is really giving you a lot of downside protection. This stock, we all agree, hasn't had any momentum since they announced a merger, right? At most, it went to $12 for like what, a fraction of a second, and then went straight back down. Like, no one's interested in the stock. It has no momentum. Today, there was huge panic selling, huge selling pressure. It went down to $9. But what happened then? Immediately, people jumped to the occasion of buying into it and pushing it back above $10. And why is that? Because of the redemption price of $10 plus the interest that they collected over time as they were looking for an acquisition target. That is a very tough support to crack because of the fact that that gives you an arbitrage opportunity. Right. So how does that impact us? Well, right now we're in turbulent times, right? When it comes to the market, I showed you the stimulus isn't impacting the SPACs favorably. So even though there's anticipation that the stimulus is going to help the economy, the SPACs are still struggling in the past 2 weeks. Now, also, we're getting into election season where the election might be contested. That's going to hurt the market. There's a lot of negative catalysts. And yet, when it comes to the $10 floor, it's still going to support you. So that's why my strategy in the next month or two, even though these stocks have not been performing well, right? This is my top three, right? We have GMHI 1078, not doing well, right? It was on an uptrend. Now it's been crashing back down. TRNE 1085, not doing well. HCAC 1077, not doing well. So that's not positive. But because they're so close to the floor price, your downside protection is huge and you have very little risk involved. So they have potential to go up before the merger, right? None of these stocks are going to be merging within a month or two, probably probably early December. But none of these stocks are merging soon. So because of that, that gives you huge protection on the downside, but you still have upside potential if the market recovers. Like the SPACs eventually will come back. So this is why I'm focusing on this strategy right now instead of going more with the hypey stocks that are 25, like that red zone that has a lot more potential downside. So in the end, is the bubble bursting when it comes to SPACs? Well, I don't know quite yet. It's too early to tell. But what I do know is that if you're putting all of these positive elements together, you're investing in a SPAC where you believe in the big idea and they're in a growing market. You're investing closer to the redemption price, so you have that downside protection. They have upside and they have a clear path to profitability. Well, all of those elements together really increase your odds of being successful with this SPAC. Now, all of them aren't going to be successful. Like when I look at these three companies, some of them probably won't become huge success. But the goal is that you're putting all of the odds in your favor instead of just following the herd off a cliff by going after FOMO and hype, right? Just hype itself is just not enough to sustain these companies to grow 300, 400% and actually sustain there until there's much better news and they kind of grow into that value over time. So that's the goal of the video, guys. I hope you enjoyed it. I hope it helps you. Please let me know in the comments what you guys think, and I'll see you guys in the next video. Thank you so much for watching.